is Martin from Secrets, the channel for learning about trading and investing. Welcome to the weekly market analysis, market next week show, where we look at what happened during the previous week in the stock markets, during the technical charts, and then try to learn something from it and plan for a better trade for the upcoming weeks. That's starting from February 12, 2024. So if you're not subscribed, please subscribe and share with your friends so that it reaches out to max. Thank you. So here we have the wrap up here. Before that, we'll go to the charts. Weekly, we know that we had been in a bull rally. It's multiple flag breakouts, flag 1, 2, 3, flag 1, 2, 3 on Banknifty, cup and handle, breakout, and we have some congestion there right at the top, but it's consolidating. It's some kind of larger volatile consolidation. The Banknifty also is very much evident. That's where we are. Banknifty evidently weaker than the Nifty. Another view, we have the price that's moving within a parallel trendline channel on both indices, and we're at the top of the channel while we're in the middle of the channel in the kind of Banknifty, which is trying to go to the top. Here is the daily view where we have clear indication of consolidation and breakouts, consolidation. In Nifty, same with Banknifty, but in a more volatile way. Right now it's in a consolidation zone. Nifty also in a consolidation zone. So candlestick analysis, if you see the weekly charts are showing that the candle is red. It's kind of a spinning top. Anyway, it's small body, which indicates some bear bull fight is there, some indecisiveness is there. In the case of Banknifty, it's a red hammer. The small body indicates indecisiveness, and the big size indicates the support that we have at the bottom. And also a hammer in a trend up or down indicates there's a possibility for reversal, but it's confirmed only if the high or the low of the candle is breached. So if it moves above the top of this last weekly candle, then it means that it can reverse from here towards that side. So spinning top at the very top is slightly dangerous. It's bearish in nature. That's what you see on Nifty on the left side. Remember that we have been facing stiff resistance at the 22,000 and the all-time high 22,100 zone, and it has been failing on the weekly for the third time. We're trying to take out that, so keep that in mind. So there's a double top pattern that may be emerging here as well. So candlestick wise, it's a bearish week that went by. Daily candlesticks, if you see, you can understand the volatility. Look at this. It's an inverted V-shaped move that happened in the last 5 days in Nifty. Very, very volatile. And the Banknifty, look at this. It's a V-shaped move. If you see consolidation and then big drop. So the big drop or big fall, sharp fall that you're seeing the previous day trading day is because of the RBI event outcome. Following the RBI event, markets fall big time, and that made it volatile. Prior to that also volatile. So inverted V-shaped moves on Nifty and a V-shaped move almost in the Banknifty. But if you look at the candlesticks for the daily, you can see that this is almost like a harami bullish, or the big size slightly outside the previous red candle. The body is very much inside the previous candle, so that's bullish in nature. Also the Banknifty, if you see, there's a piercing pattern. This is again bullish in nature. It is more than 50% of the previous candle reversal. Both of them are bear traps, right? And it went below and then reversed. So it's a bear trap on both, and it's a wide range bullish candle on the Banknifty. So it's all about daily charts are showing clear bullishness. But here we can also see that it's a consolidation inside bar on the Nifty. The bar is completely inside, so it's bullish in nature on the daily. Weekly charts, you can also see that this is a bull trap. It went, it's not exactly a bull trap. It did not move above the previous candle size. So that's a mistake I made a note of, right? So yeah, so bearish weekly and bullish daily with a large amount of volatile week that went by. Bollinger Bands are showing there is consolidation, and sideways movement is what it predicts on the daily charts of Nifty. Right side, the Banknifty also, it's consolidation, but the bias is bearish in nature rather than bullishness like the Nifty. It's bearish because of the fact that the price is below the median of the Bollinger Bands. But otherwise, both are consolidating right? And this consolidation of the bank nifty can be very volatile because look at the width of median and the band high and low, so it can be very volatile, but basically it's consolidating. Support resistance levels, you can see the first resistance on the upside would be the 22,000 big rounding number and at the all-time high 22,125. From there on, it can go as high as 22,400, 500. Now, so first support would come in at 21,700, but it's for the 20 expansion moving average there. After that, you have Fibonacci retracement at 21,300 nearby. So it also has that 50 expansion moving average supports there. If that is breached, then it can go as low as 21,150, which is the swing low. If that is breached, it can go to 21,000 rounding number and then 29,50, which is a gap support that's there. Bank Nifty, the first resistance will be to take out the 20 expansion moving average and the 50 expansion moving average zones, which is at 45,980 and 46,133. So that is taken out, then the resistance will come at Fibonacci 23 at near to 47,000 nearby. So that is also the previous swing high zones. 47,200 crossing would be the crucial. That is where it moves, it climbs back into the rally. Right. So after that, 48,000. You have 47,500 rounding number. 48,000 big rounding number has got a gap also, so it becomes stiff resistance, and then the all-time high at 48,600 and 48,500 rounding number zones. That will be the resistance on the upside, but the immediate resistance will be to take out the 46,000. Clearly, it's big rounding number, and it also has very close by 20 expansion moving average of 45,980. That's the first hurdle. Remember, it had this blue channel that it had overcome, but after the budget last week's turbulence, it had fallen back into the yellow channel, and it could retest the 200 expansion moving average, which is very close at 44,670. That is the first support on the downside. That is also matching with the Fibonacci retracement level of 50. If that is breached, the next stop would be 44,000 and the 43,960, which has got a gap support as well. So you have to keep a close eye with 200 moving average. 240, that gap of 43,950 or 44,000, that area is also breached, means it can take you to as low as 43,200 levels, right, where the next swing lows are there. So, and then after that 42,000. That's how it's. So it's very crucial for the 200 expansion moving average. So at least a swing low below that comes at 44,000 has to be kept intact. So 44,000 would be the crucial zone that you have to watch out for the next week. And upside, the crucial thing would be to watch out for the 47,000 right, resistance on the upside. So that's about support resistance on the indices. Let's go ahead. Let's study the momentum and the trend indicators. We are using the RSI momentum indicator, and we are using ADX for the trend. Basically, we are studying multi-time trend study on daily as well as the weekly. The weekly charts is Nifty and the Bank Nifty shown on the left side. You can see that Nifty clearly bullish the medium term, but Nifty had lost the bullishness and moved in the sideways and falling in the case of Bank Nifty. On the short term, Nifty is sideways, not back into the bullishness after the fall off from the RBI event, but Bank Nifty has managed to climb back with a V-shaped move, right, into the sideways from the bear zones where it had fallen. So this is a summary of that. We have all sideways momentum market. You can say it's slightly bullish edge on the case of Nifty on the medium term, right? And there is a reverse divergence, but it's still in work in progress in the case of Nifty, and also there is a daily bullish momentum divergence that is still valid in the case of Bank Nifty. So that adds up to the bullishness, that divergences that you see on Nifty and the Bank Nifty respectively. Trend indicator ADX is showing that it is DMI positive and bullish, right? And so basically Nifty is bullish, although it's falling slightly on the short term. The trend indicator is bullish on the Nifty, but it's exactly the opposite on the Bank Nifty. With respect to the trend, it's bearish on both on time frames. So it's crossed over the bearish DMI negative. So Bank Nifty is causing more trouble with respect to the trend, right? But momentum is more or less settled at sideways on both. But right, the Bank Nifty's trend is what matters. So that's something. That's why Moving on, we are studying the volatility and opportunity analysis. We already did the study of the Bollinger Bands to analyze the volatility. Now we are using the India VIX index, which has spiked up 5% and it has moved outside the low volatility regime of the 15. It's now 15.45. So remember, we had 18% of India VIX rise last 4 weeks alone. There's 1 month, 18% of spike. So you have to be cautious if it is heading towards the 20 levels. You have to be extremely cautious too, and be clever enough to cut short your positions and manage your risk accordingly. If you look at the spread between the implied volatility and the realized volatility, also it's minus 9%, not in favor of the option selling, although it's a sideways market as per the volatility spread difference. That's what it indicates. Moving ahead, the open interest data on the futures is showing its short cover and build up on Nifty and the Banknifty, which is positive, it's bullish. Open interest for the February 15th on Nifty and February 14th on Banknifty indices shows that the put call ratio is also bearish in nature, mostly not bullish, at least 0.78 on the Nifty and 0.86 on the Banknifty. Banknifty is slightly having a little more closer to the bullishness level of 1 PCR, which has not happened. So overall, open interest options is not that great picture. While futures is the Fed is built up, it has happened. It's a short covering. So that short covering, people who are gone on shorts are now taking longs or covering, but they will not sustain. It's not like a long build-up, right? Sometimes it can be very ferocious in the mid of rally, but right now we'll have to wait and see how far it can go. Right? Will it face the resistance once it reaches 22,000 and once again and do a double top reversal? We'll have to see that. Right? This is again the options open interest data that you show. The highest put rating is in at 21,000. Highest call rating is in at 23,000. Look at that, 2,000 points for an expiry on the weekly. So option traders expect a lot of volatility to come in next week. Make a lot of that. Second highest is at 21,600 and 20,200. That's also wide enough. So the Banknifty, if you see, it's 3,000 points wide betting that has happened on the puts and the call writers. The highest put rating is seen at 44,000, no supports are seen, and the highest call rating is seen as high as 47,000. Second highest is 45,000, and second highest call rating is at 49,000. That's how. So very wide range. A lot of expectation of volatility by the option writers. We're making out of that option writers of the big shots who make money. Who are big players and big sharks in the stock markets, as you know. Right. So options are. Yeah, so that's what we can make out of them. But remember, we have 4 days at least ahead for the next weekly expiry. So things could change with respect to option data. But overall options OI is kind of bearish only. With the VIX rising, it becomes even more bearish. Let's try to understand how the different industrial sectoral indices are performing. The IT sector has moved up 1%. It's an inverted hammer weekly candle. It's bullish in nature on both the time frames, so therefore we could take long positions there. The metal has slightly slipped in the sideways and into short term. It has flattish close on 0.2%, and although the momentum is rising on the bullish zones on the medium term, you have to wait for the momentum to catch up on the daily as well. Auto sector is 1% up and it's maintaining the bullish momentum, although there is some falling on the medium term, so you still can take long positions. Pharma sector is rocking. That's only sector that actually performed last week along with the reality. 3.5% up, and so wide range bullish candle, and momentum is bullish on both time frames. You can take long positions. FMCG is down. That's the sector that's most down, and it's only sector that's bearish in momentum with respect to the short term, and sideways momentum with respect to the medium term. So you'll have to stay out of taking positions with FMCG at least as things catch up. Reality also did well, just like the pharma. It's 2.3%. It's having bullish momentum both time frames. You could take long positions. So overall, if we see, nothing much has gone wrong because of this volatility in the last week. Although FMCG has turned to bearish, only the metal has gone slightly in the sideways, but otherwise everything is maintaining the bullish momentum. That's what we can make out. That's what the charts are saying. Left side corner, you have the IT sector. It's at the brim of the breakout, and it's already in the bullish momentum. And then if this breakout happens, then it can go a long way. Down below you have the metal sector, which is having an inward head and shoulder breakout, halfway in the making, heading towards the top of the trend line channel that you're seeing. Momentum is absolutely bullish. Auto sector is in the very top of the channel, and you have to be cautious on its bullish momentum because it could take some retracements. Nifty Pharma is breaking out all-time highs and then rocking. You gotta be cautious. FMCG at the top and then reversing and then taking some support as medium. It has done some correction, slightly slipped. We'll have to see whether it's able to climb back on the bullish momentum on the medium term once again or not. Reality right at the top of the trend line channel, absolute bullish momentum, and then going to be slightly cautious because at the very top of the trend line channel there could be some retracement in them, but absolutely all over bullish momentum is what you see across the sectors. Next, if you study the industrial heavyweights, the HDFC Bank has been retracing more than 20%, and then last week also was falling down, and it maintains a bearish momentum on the medium term. Look at the volumes, the big sell-off that has been happening since the last 4 weeks or more. 20% from the swing highs, and it can go further down as low as 13,250. That sounds that maybe the zone where they consolidate and then it could start the reversal. So that can be buying opportunities if you are a long-term investor in SIP mode, of course. Lines and the stock that's holding the market along with the IT is breaking out in absolute bullish momentum. These are volumes and bullish trend, and also right. HDFC Bank has taken some kickbacks, some resistance is there, it's at the all-time highs, but slightly the brim of heading into slipping in the sideways. Be cautious. But if you look at the IT stocks, unfortunately, TCS bought a rocking and breaking out, and long way to go if you consider the target of this band line channel. Long way to go, right? Long way to go, and it can go much along. Bullish momentum and the trend, absolutely. So that's what is holding the market: the IT sector and the Reliance. If you look at Kotak Bank, it has been consolidating as usual and doing nothing much. But ITC is slipped in the bearish following the results outcome, profit booking or dividends, or some drama is happening there. We're just still above the 400. It could go as low as 385. That zones, which is actually it could go much more lower towards the neckline of the rounding breakout zone, as low as that it can, or it could take it supported here. It's a flat pattern and it can consolidate and begin the reversal and then do a breakout from here. So this may be another buying opportunity for long term, just like how the HDFC is there. But it's these two stocks are dragging down the back, the HDFC Bank and the ITC. Bank always consolidates, IT and Reliance is holding. That's much of how the heavyweight stocks that contribute maximum to the indices are doing. Moving ahead, how the institutions are participating. This is where the fire selling continues, but DIs are buying to compensate for that, and then it's not enough. That's what it's right. So that also slightly moved up on the derivative sector. You can see the red, the big sell-off that has happened in the previous weeks, right? In the previous big sell-offs have happened from the Fyers and DIs have been trying to buy drastically, just balance with the sell-off. Well, in between they do some small profit booking also, but FIS selling continues. That's a worry. But look at this, FIS are bullish, medium bullish on the options and the futures. The pro traders also are also mildly bullish and strong bullish on the options, mildly bullish on the futures. But it's the clients who are bearish. This is data for the last trading day on the Friday, right? That's why market moved on the Friday bullish. So it's not necessarily indicated that the next day they would remain, because on Thursday they were bearish and then immediately they turned bullish. So they keep switching this, but this is what the last information on the FNO is showing. They're bullish. The market could follow that and move up. That's what we'll have to assume, but there is no guarantee. They'll be doing all kinds of. But overall, if you see net to net, so longs have slightly moved up, but FIS not selling big, but are selling, are continuing to selling. They had big sell-off of 40,000 crores in the cash market last couple of weeks. So that's kind of thing that's happening. That's slightly worrying. The hawkish Fed outcome intensified that a little bit. Otherwise, it would have been a different thing that may have happened. So you have to wait for that. Until then, it may be small selling and buying and profit booking and selling. This may continue until there is a Fed rate outcome that may come in March or beyond that. Never know. Now, we had realized the global markets, the currencies, and the commodities. Dollar had moved flattish, 0.10% up. It's at the neckline. It's in sideways moment. It's at 103, 104, 104 actually. Right, And USD-INR currency pair, rupee remains weak and it's a sideways momentum USD-INR. So again, flattish close at 83 being managed by the RBI at that top of the hedge. Actually speaking, this is wrong. This is not the this is not the correct picture. So this is how the USD-INR would look like, right? So you can see that it's on the top of the wedge being managed by the also bang on note. That's why it's not spiking up towards the top to 84, 85 levels, and has been staying there since ages, right? At least 10, 15 weeks. That's been there. 83 rupee remains too weak, but dollar is spiking up and down, up and down. That's what's happening. So it's a flattish rupee close and a dollar close. Crude oil, if you see, it is in a parallel channel. It has taken a support at the trend line, long trend line from the COVID times, and it is spiking up to move towards the top of the channel, which is not that great. Last week we have seen a 6% spike. This is because of some war-related oil shortage or something, but 76.5, and it's worrying that it is heading towards the 80 plus once again. Being an oil importing company, we may have worries, which may reflect in the market. So I'm cautious about that. Gold is, you can see that it had made all-time highs earlier several weeks before and then consolidated, not ready to fall down, maintaining the sideways momentum, unable to hold its position at the top. But yeah, it may be consolidation there for a purpose to break out once again above the all-time high. But as of now, sideways falling is the momentum of the gold, and spiking up price momentum sideways is what is on the oil. That's the nutshell, right? Next, if you see the global markets, you can see that the Dow Jones is breaking out at the all-time high, although we had a flattish close week-to-week basis on that. But Nasdaq is breaking out, and then it's at all-time highs, and you can see S&P 500 also all-time highs breaking out. Remember, those markets were rallying just like I was rallying. It all started with the US inflation coming down, and the rally began in Indian markets and US markets simultaneously. And US markets is flattish close but positive. S&P 500 is 1.4%, and Nasdaq is 2% of its bullish rising momentum. So US market is good, doing good in some other markets, so that's positive. So no bad, that bad global Q seen on the weekly existence. Two actionables. One is Cipla. So pharma is breaking out to all-time highs. Cipla is having inverted head and shoulder breakout on the weekly. Momentum is all-time high. Absolute bullish momentum and the trend. Volumes are decent, so it could be reasonable risk reward to have trading or long swing trade opportunities also if required. Positional, we may call it. Reliance is also a long call. It's a consolidation breakout. Stop midway, but it could go as high as 3,400, considering the height of the parallel channel where it was long consolidating. Absolute bullish momentum with volumes decent, and trend indicator readings also bullish. So Reliance long call, Cipla long call. Next we have another action number that's a bear call and spread on the Nifty on the weekly for the coming expiry. Oh, I'm really sorry. Anyway, you can do this also because this is a monthly index call that is taken. It's a 2200 and then 22600. This is also reward come out before the expiry day, and if it breaks out to new all-time highs in about 22,300, which is less likely considering the resistance 20,000, then just get out of it and then we are a loss, right? Or we can even adjust and by rolling up or down if it moves violently on the rolling up, right, from the opposite side where it's trending. So yeah, so that's a bear call spread on the monthly that is shown here. You can do the same on the weekly also. Weekly expiry of February 15th. This is for the February end monthly that is shown. Right? Basically, you're selling a call at 2200 and then much higher call we are buying right? And now on net to net, it will become net credit strategy. So the spread comparatively safe. So any loss that happens, any fall that happens in case because of the resistance, double top and all that, you'll be safe, you'll make money. But if it breaks out slightly, it moves up, no problem. So if it breaks out violently, then we have problem. Right? So that's all we have to. That's a Nifty weekly, monthly option strategy and a two stock picks ups as actionables. Let's just wrap up all the analysis that we did. Markets arrived at another volatile week after the RBI policy outcome, and then it's lost some of the previous gains with respect to the price, momentum, and the trend. And the banks are weak. Right? Remember, we have retraced 24.5% on the Nifty and 8.5%, a deeper cut on the Banknifty, right from the top of the trend line channel. Well, so we have the online rally of 26 to 30% respectively, multiple breakouts and flag pattern and all that. But we just there in the middle of the rally. Nifty having recovered completely previous week, and then we have this resistance that is coming. So let's just analyze what goes in favor of the bears and the bulls. First, the bears. The small body is always indecisive. That's what the pattern. So there's a double top in Nifty. Right? There is a potential for reverse, not a confirmation. Keep that in mind. Bank resistance is less than 2050 EMA, expansion moving average. It's resisting right below the 20 lemma. That's it. Banknifty is having bearish trend on both time frames. Trouble. It's lagging behind basically with respect to trend and momentum with the Nifty as compared to the Nifty basically. All the patterns showing this contraction that's happening with the bearish bias on the Banknifty especially. Contraction is consolidation, not moving up. So it's in favor of the bears again. Bears open interest PCR. PCR is not great, less than 1. Mix is rising up above 50, coming out of the lower reaching. HDFC Bank and ITC heavy bases contribute maximum to the indices are having bearish momentum. Both. So what's in favor of the bulls? It's a short covering that happened on futures on Friday. And both indices very close to all-time high. Even now, bullish momentum divergence that's seen on the Banknifty, which could potentially Banknifty actually recovered from the bearish to the sideways, and now there is a divergence which says that it can move further up. Fyers FNO is showing its bullishness last on Friday. Those markets are green and with all-time highs, rallying. Across the sector is still strong. Everything except XMGG is still strong with bullish momentum on the medium term and long term. Right. So actually, market went volatile for the RBI policy, lost some of the momentum that it gained, still not doing that bad, except for Banknifty which is lagging behind and performing poor. So all eyes are now over the bank index, whether the recovery will happen there or not. So next up the rally would be depending on that. Or is this the end? 4 or 5 times we had trouble at the 22,000K in the Nifty, and is this going to be a deeper correction that can begin from there? We have to be watchful on that. So technically charts are sideways on both time frames if you see. Right, the weak bank index market view overall for the next weeks for me is neutral, sideways, right, with a bearish bias, mild. That's what my views. Always keep in mind that the global cues, Russian fears, war, interest rate, COVID, and all these things can cause big moves, big volatile bearish moves out of the uncertainty that comes in, and then it will be black swans that can happen. So no technical analysis can help you on that. Only your risk management and how your position size, your leverage, all this would help you or destroy you. Right. So make it on the next level. The next week's levels on the Nifty and the Banknifty are 21,000 to 22,500. Very wide range. 44,000 and 47,500 on the Banknifty. That's where the highest put. And call is also seen in that, but this is based on the charts. These are the range in between the market is likely to move for the next week based on our analysis. So basically 12,000 and 47,000 is crucial on the indices to keep that. If it doesn't move with the next leg of rally, it has to make those levels at least. As I always say, hedge your positions and manage your risk. That's all in our hands. Technical analysis will only help you to find probabilities, learn probabilities, and place your bets accordingly. If it goes wrong, what matters is how much is your position size, right? How much is your stop loss, right? So that's all that matters. So risk management is what you have to be careful and cautious about when our market is rising, having a rising base especially, right? So that's all I have. If you're watching this and not subscribed, please subscribe and share your friends and colleagues, and so that reaches out tomorrow. Please put your comments, likes, feedback and all that. It helps a lot. And if you're not subscribed to training services, if you want, then you can click on that link. And we have regular technical analysis charts posted on the Twitter or the X, right? So you can subscribe to that, and then stay updated on the technical analysis on a daily basis. Right, so that's all I have. So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.